There are 9 common ways that crypto investors, new and experienced alike, get wrecked. Can we avoid them? Or are some inevitable? Hello, I'm Crypto Casey, and in this video we will explore the 9 common ways that people lose money in this space so we can identify and try to avoid these scenarios to become more successful crypto investors long term. Be sure to check out our sponsors, Ledger, Robotic Crypto Trader, and Tangem Wallet. Invest in premium crypto wallets with extra security layers like Ledger Stax and Flex, available for the best discount on the market specifically for our community that comes with $10 of free Bitcoin. Diversify your investment strategy by using Robotic Crypto Trader, an AI-driven trading bot that connects to our Coinbase account and trades 24/7 for daily profits while we sleep. Learn more by checking out this walkthrough video guide all about it, and invest in a Tangem wallet, the most affordable and easiest crypto wallet to set up and use on the market right now. Perfect for beginners and advanced users alike to diversify your crypto among different wallets with different technology. So scroll down and use links below to redeem any special offers they have for us. Sweet. Each of these pitfalls are easy to fall prey to, but they are just as easy to avoid once we are aware of them and stay mindful of them throughout our crypto investing journey together. So let's hit it. Way to get wrecked 1. Treating crypto as a get-rich-quick scheme. I'm sure crypto piqued many of our interests initially after hearing stories of people throwing a relatively small amount of money into a project, like a couple $100, and then it becoming worth several thousand or hundreds of thousands, or in some cases millions of dollars over a few months or even overnight. And although this sounds extremely appealing, it's not the expectation we should have when deciding to diversify our investment portfolio into the cryptocurrency market. Sure, there are a ton of amazing stories out there about people making massive amounts of money in a short period of time. However, 99% of it is absolutely luck. Why is it so? Well, first of all, the cryptocurrency market is largely unregulated, which makes it extremely susceptible to manipulation. With the naturally high price volatility from being a new asset class, in addition to blatant and deliberate manipulated price movement, crypto market valuations swing violently and radically. High risk creates potential high reward scenarios. Coupled with drastic price movements, you can see how a lucky investment made at the perfect time into certain projects creates a perfect storm for some people to make a ridiculous amount of money quickly, assuming they take profit and retain some of the gains. And unfortunately, what a lot of new and experienced investors alike fall prey to is gambling a significant amount of cash they actually cannot afford to lose in hopes of getting that lucky moonshot that makes them millionaires overnight. Treating crypto as a get-rich-quick scheme will leave most of us absolutely wrecked, so don't do it. Instead, set aside an amount of money you're looking to invest for the long term in DCA, or dollar cost average, into positions. Dollar cost averaging is when you decide on a certain amount of money, like $10, you're going to invest at a certain frequency, like once per week, into Bitcoin or similar, regardless of the price or other factors. That way you are building your long-term investments with less exposure to price volatility, with a proven strategy that way more people have used over the past few years to build massive amounts of wealth than the small percentage of gamblers that got lucky. If you'd like to learn how to DCA or dollar cost average step by step, check out this video guide by clicking on the link above. Cool. The next way many crypto investors get wrecked: trying to time the market. We've all definitely fallen prey to trying to time the market by following so-called chart gurus, mirroring so-called trading experts' trades, making decisions based off of the fear and greed index, jumping into projects based on key dates on their roadmaps, all in hopes of trying to time the market in order to buy at the absolute lows and sell at the absolute highs. And for aforementioned reasons, that being that the crypto market is heavily manipulated. Unless you get lucky, you'll get wrecked by trying to time the market. No one can predict and time this market. It doesn't matter which crypto expert, influencer, or guru you follow. I promise we have no clue what the price is going to be in the future, and we are all out here making random wild guesses at best. There are some helpful tools out there now, like the money line indicator we've been using for well over a year now, to monitor bullish and bearish trend flips, so we have a much better idea about when to buy, sell, and hold crypto. And if you'd like to learn more about how it works, check out this video guide by clicking on the link above. And using the link below, we can get access to the Moneyline tool from Moralis Money for a nice discount, so scroll down and check it out. At the end of the day, don't try to time or predict this market. Like we discussed earlier, dollar cost average into positions to hold for a long term. Believe me, your life will be much more enjoyable and carefree once you adopt and stick to the long-term DCA investment strategy with crypto. Cool. The next way to get wrecked in crypto: falling prey to FOMO. Crypto investors get wrecked when they fall prey to FOMO. FOMO is a popular acronym used in crypto investing that stands for fear of missing out. Most people probably got into crypto near market tops because they had been watching the prices go up and up and up, and each leg up, the searing pain of waiting too long to jump in gets worse and worse until finally they FOMO in. They FOMO in and it either goes up for a bit before crashing or it starts crashing. Wrecked. Or another scenario people FOMO into is, let's say something big is on a project's horizon. Here's a personal story of how FOMO got the best of me last cycle. I had been anticipating the drop of an NFT project, and I knew in the back of my head it was coming up that particular week, but didn't bother to solidify the exact date in my memory. So one day, on their Discord, I see a message flash that the minting window was open, but just for a short period of time, with limited NFTs per wallet. Without skipping a beat, I clicked on the link, connected my wallet, and long story short, pretty much ended up sending almost $20,000 worth of Ethereum to a scammer. Wrecked. Amazing. So the FOMO is real, fam. Be aware of it, identify it when you start to feel it, and resist or get wrecked. Alrighty, up next. Falling prey to FUD. Crypto investors get wrecked when they fall prey to FUD. And FUD is a popular acronym in crypto that stands for fear, uncertainty, and doubt. People that capitulate to FUD sell most, if not all, of their positions in certain cryptos because of a few reasons. One, maybe some bad media was released about the project, like a hack, failed or delayed launch, a founder leaves or got into trouble, or maybe a competitor hits the scene and starts trying to get market share. Sometimes people experience FUD from things unrelated to crypto that could affect the market, like a potential new pandemic, escalation of wars, action by the Federal Reserve, etc. FUD also happens if a person isn't comfortable with the sheer volatility of the crypto market, and watching the wild price swings in the value of their portfolios causes them to lose sleep, so they just sell everything. Most of the time when crypto investors make moves based on FUD, they miss out on opportunities to make gains. So in the end, the best thing to do to avoid falling prey to FUD is for each project you're invested in, and any project you are looking to invest in, decide how long you want to invest in it and hold the project, whether it's a short-term play like a month or a year, or a long-term play you want to hold for over a year. Or you can decide at what price point you want to sell it, like if it doubles in price, triples, or similar. Or like we've explored together over a year now, we can reference the Moneyline tool and buy a crypto when it's in a bullish trend and sell it when it flips into a bearish trend. Either way, creating an investment plan and sticking to it is key to becoming a successful crypto investor. Sweet. Moving right along, next up, second guessing every decision. Sometimes even when we formulate a plan, like which project we are going to invest in, how long we are going to hold it, at what price point to sell it, and what we will do with the profits, once we actually take action, we second guess our decision. We start to waffle thinking, man, did I pick the right project? Maybe I should have gone with another one, or just put up half as much in that one and use the other half for another project. I bought too high, or maybe I sold too low, should have waited, or maybe I should undo the trade and think more. As crypto investors, it is very natural to second guess every move, and it's very tempting to want to revert decisions we made. As we discussed previously, create a plan for each project and stick to it. Second guessing everything will leave you emotionally wrecked, as well as the value of your portfolio over the long term. Make a plan, make decisions based off of the plan, stick to the plan. Amazing. All right, we're about halfway there. We have 4 more common reasons crypto investors get wrecked to cover. First, as crypto investors, make sure you're in complete control and ownership of your digital assets with different hardware wallets to diversify risk. Tangem wallet is a set of 3 cards that work just like having a set of 3 house keys or car keys that function like backups. They only take a minute or so to set up. They come in a sleek matte black design or our custom limited edition 3 pillars of blockchain set featuring 3 different colored cards with cool blockchain inspired designs. And Ledger offers premium crypto hardware wallet options with some extra security features, like with Ledger Stax and their brand new Ledger Flex devices. They are the first of their kind as a new crypto wallet category, which is a secure touchscreen featuring a full keyboard, keypad, making it super user-friendly. Both overall are really unique physical devices with breakthrough technology that are great additions to our crypto wallet arsenal. Watch a full review of them in this video, and Ledger is offering our community the best discount available on the market that comes with $10 worth of free Bitcoin for a limited time. So be sure to scroll down and use links below to redeem all the special offers they have for us. Next up, falling prey to scams. Scams in crypto are everywhere. Scamming is absolutely rampant in this space. There are scam comments below this video pretending to be me or claiming to be an expert trader with fake investment plans. On Instagram, Facebook, X, Discord, Telegram, TikTok, and pretty much every media platform, there are scammers pretending to be me or claiming to be expert traders with fake investment plans. There are scammers that spoof email addresses to make it look like emails are coming from Casey@CryptoCasey.com and other popular crypto influencers or companies like Coinbase, Ledger, and similar. There are scam websites that are set up to look like official ones to try and steal your login credentials or your wallet private keys. There are endless ways we can all get scammed as a crypto investor. However, if you follow a few simple rules and stay aware of key things to keep in mind, you should stay safe. Basically, scammers want your login credentials to your crypto accounts, all of your financial accounts. They want your cell phone provider, your cell phone number, your private key, which can be in the form of 12 or 24 word seed phrase. They want you to install software on your computer they claim will turn a profit for you. They want you to click on links from text messages, emails, or direct messages on social media to direct you to fake sites or to install malware on your device. And they also want you to send them crypto or cash. Check out this video guide for crypto investors all about different products and services we can use to increase the security of our crypto investments, money in our bank accounts, private data, identity, and more by clicking on the link above. At the end of the day, if anyone asks you to install mining software they claim will make you a profit, or if anyone asks you to send them crypto or money they say will generate profit for you, steer clear. They are trying to steal your money. Also, never ever give anyone or type into fields on a web page, in an email or similar, your 12 to 24 word seed phrase, because you will lose all of the crypto in that wallet, 100%. If you want to learn more about how crypto wallets work so you can better protect and secure your funds, here's a video guide for beginners about crypto wallets that will make you have a eureka moment where you finally understand the importance of your wallet seed phrase. Check it out by clicking on the link above. So watch out, stay mindful, and remember, I nor will any other influencer in the crypto space ask you to send us money or crypto. Never ever. A good rule of thumb is to never send money or crypto to anyone you do not know, ever, unless you're willing to lose it all and get wrecked. Nice. The next way we can get wrecked, not doing your own research. Many people in crypto make investments in projects based on recommendations of crypto influencers, their friends, family, advertisements, or random people they chat with in person or on the internet, which is fine, unless you decide to invest in it without doing your own due diligence and personally taking the time to research the project. Jumping into a project without doing your own research will usually leave you absolutely wrecked. So like we discussed earlier, do not FOMO in because you could potentially be getting scammed by someone, or you may find yourself invested in a project that you don't want in your portfolio. When you hear about a new and exciting opportunity, take a day or a week or so, however much free time you have, to check it out without rushing into it. And if you decide, based on your own research, that it's a good match for you, decide how much you're going to invest, how long you're going to stay invested, or what price point you're going to sell, then start dollar cost averaging into a position. Great. The next way many crypto investors get wrecked: rushing through complex processes. Rushing in crypto will get you wrecked. Rushing through complex processes like a new NFT mint, staking, yield farming, trading on decentralized exchanges, and all kinds of different crypto activities available to engage in will leave you wrecked. Just like how I rushed into the fake NFT mint, got scammed out of almost 20K, all because of FOMO and rushing around, capitulating to FOMO. I've had friends rushing around trying to buy $100 worth of a crypto on a decentralized exchange without realizing the gas fees were $200. And it's not until you rush through and realize you lost all your money once the trade's over. Or some people accidentally end up on the wrong site, connect their wallet, get scammed, and once they realize it, try to rush and send everything out of their wallet, thinking that they're going to beat the scammer from draining their wallet. Little did they know, because they were rushing around, the website ran a script where basically no matter what recipient address you paste into it to make the transaction, it reverts back to the scammers, and you end up sending all of the funds in your wallet to them anyways. That's why it's important to take time to double and triple check the wallet addresses you're sending funds to. And remember, if you accidentally send money to a scammer and did not give them your seed phrase or private key, they don't have access to your wallet. In a case like this, check out that guide I mentioned earlier, and using another wallet app, restore access to your wallet, then safely send funds elsewhere if you choose to do so. Cool. Onto our final common way crypto investors get wrecked: treating crypto as a set it and forget it investment. Crypto is a new and emerging type of digital asset that we are all extremely early in as investors. Staying up to date on the latest news, regulations, project developments, hacks, technology, laws, etc. is crucial if you want to be successful in this space. Treating crypto as a set it and forget it investment is a one-way ticket to Rekt City. Now, although it may sound overwhelming, it's not actually that much daily or weekly upkeep that you need to do. With a significant amount of upward price potential, and the potential opportunity to generate a massive amount of wealth in a relatively short period of time, the upkeep is extremely worth it in crypto. One of the easiest, simplest ways we can upkeep our crypto game is by watching videos like these to stay aware of what's happening in the crypto markets, what to watch out for, like these 9 common ways people get wrecked, and to learn about new exciting tools we can use to diversify our investment strategy, like the robotic crypto trader I mentioned earlier. Interestingly enough, this may be the closest thing to a set it and forget it strategy. It is exactly how it sounds. It's a fully automated crypto trading bot that is enhanced with AI, or artificial intelligence, and doesn't require us to actively trade or make decisions about when to trade. Here's how it works. Basically, we connect our Coinbase account to the trader, select which cryptocurrencies we want it to trade, and then it does what seems, so far in my experience, is magic. I highly suggest checking out the Coinbase One plan because it comes with 0 trading fees. Our USDC in our account can earn a higher interest rate at 5.55%, all while the robotic crypto trader decides when to take profit for us automatically. Our community has a special discount for a 3-year license of the trader, so be sure to scroll down and sign up for Coinbase One, redeem the discount for the trader, and also sign up for a webinar all about where we walk through aspects of the trader and answer any questions you may have to see if it's a good addition to your overall investment strategy. Awesome. If you would like to watch a step-by-step guide on setting up Tangem Wallet and how it works, check out this video. If you'd like to watch a full review of Ledger Stax and Flex devices to see them in action, check out this video. And to get a 3-year license for the robotic crypto trader at a huge discount, click on the link on the screen. Like and subscribe for more. Be safe out there.